Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. So we started the day. The S&P was up a few handles, and we were trying to figure out, what's next. Last week we had that hard break in tech. The Qs opened up at new highs and basically failed and closed near lows and had a big bearish engulfing bar. So the question was, would that lead to lower prices or not? So today, with the futures up, I think some guys that might have bought in the hole on Friday said, hey, I'm going to take some profits if they held it over the weekend because everything was up a few bucks. And or if people didn't take it home, said, hey, you know what? From Friday's lows to opening up with tech being vulnerable, let me get short, especially if the Friday's high doesn't hold in the Qs and in some of the other names. And then I would say within the first half hour, tech definitely got weak real quick. S&P held in there, the Dow held in there, and there was just like lots of divergences. And for me, I was like, you know what? I'm not going to do too much. I tried a few things worked, a few things didn't, nothing to write home about. And I'm pretty much in, one position in all cash versus 6, 7, 8, 9 longs like I had for the last, few multiple weeks as tech was trending above the 8 and 21 day. So let's just get into the charts and try and figure out, how to navigate this for now. You go to the charts and you'll see here, S&P is still fine. Some guys are looking at the weakness in tech and just shorting the S&P, and at this point, it's not telling you to do so. Okay, you do have this mini floor to trade against. It's been acting well ever since taking out that descending channel here. Gave you a nice trend above the 8-day, got extended, and then came in a little bit. So as of now, this is still just in an upper channel above the 8-day, above the 21-day. So not really telling you to short this. Okay, but this looks a little different. Not telling you to be all in long either. It looks a little different than the Qs, or the Qs which I like to trade. The Qs which I think leads a healthier market, to me looks a little vulnerable, okay? If you remember this break right here, okay, it led to a little red dog reversal the day after, and then you had some choppy trading all the way up into, remember that gap up that failed real quickly and led to another down day to lower lows. Well, here was your Thursday, okay, reversal. That was that shot across the bow where I said, hey, clean up some loose positions because who knows? And then today, okay, it went above 144.08 and didn't hold it. Some guy said, hey, I'm going to short it versus the morning 5-minute high, or short it if it gets back below 144.08 with a stop at the high of the morning. So you're risking 30 cents and came in quite a lot. Okay, at this point, this is a lower high to that. Does it mean be all in short tech? No, but I would definitely be very, very careful with whatever you're in and have a reason for what you're in, because some of the glamour names are all breaking the 21-day and the 50-day, and the Qs is pretty elevated. Okay, so if this happens to break below this spot tomorrow, you'll see how do we handle the reactionary low and maybe even down to the 50-day. Okay, all in all, I don't love being short, but I would think some guys who like to be short and are looking for a signal, well, you got your signal today, a little bit of confirmation of this wide range bar, but you also have first day of the month and some new flow, so who knows if they try and just buy off the open, maybe that's another short. But at this point, I would not be heavy long tech. I did try and buy a few things in tech. I tried to buy Amazon on the 50-day. I actually made money doing it, but it felt heavy, and I tweeted to RAA that, I just don't like this trade. If it was any good, it should get back up above 1,000 quick, but it was heavy. And now if you look at something like Amazon had the reversal the day of earnings, which it gave us a nice pre-earnings. Remember the pre-earnings move? We like it when it's tight. That was when Amazon was tight, when you could have been a buyer versus the 8-day and added on the breakout above 1,015. Well, that was then, and then that was your high. And now you have basic hole in the chart that did not get filled, showing you a bit of weakness. And then today, all right, it broke below your point of reference of 1,001. That was the first spot. And then kind of stayed below, played with the 50-day, and now closed below. So there are probably some people that are short Amazon saying, hey, earnings are out of the way. They didn't just buy it, and now it seems as if the next real support is down here. So we'll see what happens tomorrow. I'm not short Amazon overnight, but I'm also not long it, because anytime a stock closes in the dead lows, the good book tells me, you be out of it or, be short it, especially when you get back to 50-day. But, the stock to me, long term's a long, so I'm not, I'm not short it. So tomorrow we'll see what happens. Does it open up a few dollars and reclaim this 987 for a retest of the 50-day? That would be a nice trade. That would be about a $9 trade if they open it up tomorrow. It is what it is. Maybe people sell it, into resistance that's now going to be this 997 to 1001. But when this technical pattern here is a lot different than this one ramping up into earnings. Okay, and the reason why I was a little hesitant, because I'm like, hey, if Google, is making lower lows, and if Google is below the 50-day, even though it's a little weaker, I think, and fundamentally not as strong as Amazon, why can't Amazon do it? Okay, now this Google looks like it's going to be taking out this spot. Okay, it opened up a little bit, went red, and now its major support is all the way down here. At this point, what is it? It's below the 8-day, the 21-day, and the 50-day. So that's telling you not to be long on an active basis Google. All right, as far as Facebook got downgraded today. It was, who was going to win that battle, and the sellers won that battle. You could have been long Facebook because it was strong, okay, on Friday and had a way out of it. It actually went green. So you could say, hey, let me just get out of the way, let me figure it out. Or you could have said, hey, you know what, Amazon's starting to break down. Google's making, is already red, so let me just get out of the way with Facebook. But now for Facebook, it's, I would be careful long, just because, again, you have Amazon below the 50-day and Google below the 50-day. I understand that, Facebook's strong, but can't really do it on its own. And with those things breaking down, that's not going to give tech any FOMO. So anyway, here's your pivot, 167.50. We'll see how that reacts there. We've had a lot of red, green in tech, and it's, so, you might want to just be light either way. What do I mean by that? Look at BABA. BABA, every day has been getting choppier. Okay, you had this little breakout that failed. Okay, and then you had the Bible dip, and then today it was up and then went red, and that's getting choppy. It hasn't reported earnings yet, so it's still neither here or there, but it's still above the 8-day, but not a lot of continuity. Okay, Baidu tried to be real strong, but we sold the options on Friday, and now everyone's like, but maybe it could hold up on its own. I'm like, look how extended it is from the 8-day. I know this was a nice viable pivot, and then it gapped up on earnings, but I would just let it consolidate a little bit. On the weekly chart, I think it looks great. Yes, we were playing for it for a move to 220 with options, and it happened. It's good when things work out. But anyway, here's that level. So maybe it actually goes sideways above it for a while, and then it does look like at some point it's going to take that out. But here was your spot to get heavily involved, not up here when tech looks a little vulnerable. So just take a little care. If it comes in, maybe we'll buy some options. Netflix looks like Facebook. Netflix had a big move, but it's not going to hold up all by itself with people thinking I have to be involved for a new high trade when you have Amazon and Google below the 50-day. Okay, this opened up, and now it looks like you have a little bit of a bear flag here, that didn't reclaim any of this wide range bar. So we'll see what happens. This is where the gap pivot is, and there's a big gap there. So just be a little careful. This morning in the private Twitter, I was like, hey guys, we had a good, red to green trade Friday. Okay, it could be the exact opposite today. We're opening up, maybe you get a green to red, and you never know how much you're going to get really hit. But if you short versus a 15-minute high, you just put stay short and put a stop in. If you wait for it to get back below momentum level, like yesterday's high or Friday's high, then you do it that way. And it's just simplified tactical version to make some cash flow versus worrying about Washington, worrying about Trump, worrying about the mooch, worrying about these things. You worry about your price action, you worry about your process. For me, I'm a little confused because tech is really weak and everything else is kind of hanging around. Guys were like, red dog, look at the banks. Well, Citigroup looks pretty good. Looks like it's ready to break out above this spot. But I just was like, what? Maybe it does it, but I'm just not buying the banks right now. You have a jobs report Friday. Doesn't look like we're going to get any, pro-growth. But actually now I'm talking like an idiot. I'm thinking about the news out there. Either way, if some guys are long Citigroup. If you're long Citigroup, okay, be long versus 67.52. That looks pretty good. J.P. Morgan, I think that it's taken a little bit of time. That looks okay also. I'm not in a rush to be a buyer of J.P. Morgan again. We did it last week, and it worked out a little bit, and then now I just think that there just needs time for this to continue to go sideways. But if you're in it, it's in the game. I thought maybe it got marked up because it was the last day of the month, so we'll see. Maybe get some new funds tomorrow, but just take care. I'm still sitting in XLE. The close was a little weaker, but I think it's fine. I think it's been a weak sector. Some people may not want it on the books for the month, but either way, we started talking about it in here on CNBC, and it never broke to 64.50, and now it's going sideways and looks like it could, work its way up to here. For those of you that played oil, congratulations. You know, that too had a nice move up to the 200-day. Today on the close was not your time to buy oil. It was when it cleared this spot and took back the 50-day right around here. Now, you know, it could continue, but just take some care. Doesn't mean you could just short it there either. So in conclusion, you know, it's the last day of July. You know, a little bit of shenanigans probably going on between markups and clearing books, and you know, we have some faulty signals in tech. Doesn't mean we're going to crash, but you know, doesn't mean you could just buy the first dip there. If it does, you know, give us in August, you know, corrective type phase, which can happen. So I'm going to stay flexible. It's been a great month. Okay, I like when there's continuity. I like when things make sense. When things don't make sense, you know what? I'll pick and choose my spots and hopefully help you pick and choose your spots. Have a great night, and if you're looking for ideas and you're looking for more guidance, you know, the Redler All Access private Twitter, it's $10 a month. I think, you know, that's a pretty decent value for someone who gets up at 4:45, puts everything down on paper, and then tries to trade it the same way you can, and could definitely help you if you're a bit frustrated. And that's it. See you tomorrow morning. Have a good night.